Yeah. Um, so what I'll do is I'm probably gonna cover a few different random looking sort of aspects tonight. It's mainly going to be based around the setups from Euro GBP that's uh, hopefully Ellen took. I don't know if she actually took it, but she had it marked up and everything like that, and we was actually talking about it. Uh, so it hit Wednesday a week ago when we got the break structure. um, so it's pretty much, pardon me, excuse me. So I'll go over the sort of setup as I would normally mark it up and did mark it up and see it. So I was I was watching this purely from a structure perspective. So overall, you can sort of see we're, we're bullish. We've had some form of breaks to the downside, but whether it continues to the downside or not is anyone's guess at the minute. I don't know. But if I'd have not been lazy, I would have caught this, but I just not been bothered to look at the chart over the last couple of weeks. So it is what it is. But the markup, I had the markup. So I'd be fairly comfortable if I did take it. I'd be fairly comfortable that price is at least going to come up into this sort of imbalance somewhere, maybe up higher, maybe even take the high. But I'd be fairly comfortable it's coming up somewhere in this, pretty much as a minimum. So I was looking at it. Obviously, we'd taken this previous 15-minute low here. Obviously, I've got the structures drawn there. Right, and so you can see. So after obviously it's change of character on this swing down here, because obviously you can see it's bullish structures there. Obviously it takes liquidity, sweeps, little sweep there, break a structure on the 15, pull back, it gives an entry from that, blah blah blah. That's not what we're looking over. But as it takes this 15-minute low, now I don't know if you'll see, you will when I zoom in. I've not got the structure on the wick low. That's because that is spread hour. And this threw me majorly when I was looking for liquidity. Like I say, I didn't have liquidity marked for this, but for Peter, I was trying to find some to make him visually aware that the liquidity was taken, but I wasn't specifically looking for it myself. But as you can see, we've got as it's coming towards the low, it's doing its 1 minute thing. We get a pullback after the trend lines. Now I know the trend line was created. We get a pullback. We get the sweep of liquidity into a point of interest that took liquidity. Yeah. So liquidity taken, sweep, break a structure. Obviously, the fairly happy with what it's tapped into, which we often don't. I don't talk about that enough, maybe, but if you get the rest of your confirmations, whatever they will be, and we will discuss them a bit more, you've got to look at what's being tapped into as well. I generally believe that's important. So this being the cause of this liquidity being taken, we get obviously a near enough tap in there. You'd have to break it down on that's probably the seconds charts to decide if you was happy with that one tapping in or not. But obviously we get it, we just about get something there. Once it taps into that, it shows bullish signs because it breaks the 1 minute high. So this green structure here, bearish for there, makes a lower high, lower low, and then we get a break above that. So signal that we might go long for a little bit. It might, like I said, I don't know if it's going to mitigate something in here and continue lower. If the 15 minutes, if it's going to stick with the current 15-minute direction, then it will likely, like I say, mitigate something in there and then make a new low. The 4 hour, I believe, is long, so we'll see. Check the daily just so I can see a bit more. It could go either. Could go either. I don't know. Um, yeah, so if I was in this, like I say, I'd be TP around here because I don't know if it's gonna. This is a good area for it to possibly continue long. So I'd be 50-50. I'm 50-50 if he's going to continue higher or lower. I don't know. So obviously we would anticipate take profits to be in our best favour. Obviously it could go 100R, but I'd consider it risky. Um, so after it breaks the 1 minute high, obviously it comes back and it mitigates an entry, which is pretty much the lowest imbalance, which I'll show you. I can't remember what I'm at. Yeah, 5. Didn't mean to do that. So we see a bit of a push away from this sort of area here. Maybe comes down to there. I can't remember how deep it comes in. But as you can see, we get a substantial push away from this point here in a way. And I also like that there's a decent push away this side. So balanced price range, if that's what we want to call it. But again, that's if we take the liquidity sweep of, of the if we get the sweep of the liquidity into one of our confirmations, we get a break into our confirmations. This is pretty much the lowest imbalance that we would anticipate to be filled before it reverses. Obviously, there'll be some higher, so there's good ones up here, but this is the last one. So it, obviously, if it filled that and went beyond, it would have took the low anyway, the sweep low. No, sorry, it's not the low. It's maybe not the lowest actually because there's a bit of price action below it. Yeah, yeah. There's all this below it. Sorry, but I believe that this takes liquidity across up here. There's also liquidity there by the looks of it. All added confirmations, no doubt. Don't get away with that one. No, no, no. Anyway, might be something there anyway. It might be this. It's close. I'm not going to look anyway. It doesn't matter. But yeah, obviously when when we are looking for entries, I'm just going to play some candles. So that point there, obviously you can see it's just wicked above that where this green line is because that green line should be set on the high. Yeah, the high just across here. I mean, so basically, as soon as that closed above that 1 minute high, I would say to you guys that with all the other confirmations, all of this price action that's live there, level from this line across here, and if there's any really nice then imbalances to be filled, then that's likely a good area for your entry to be placed at. So obviously, I always recommend imbalance to be filled for your entry. So at the point it's filled, that's where your entry should be. At the point it's filled, and obviously in this situation it's a buy, so it's an order block below the imbalance that's filled. that order block that creates the cause and creation of the imbalance is where your below that is where your stop loss should be, and then obviously allow for spreads and a little bit more because your broker and your trading view feed might be very slightly different by few pipettes. So I always, like I say, I add spreads, and then if with spreads added, whatever the broker gives me, I think it was 4 pipettes on my broker. What is it? So about 2 pips, 4 for spreads, 4 pipettes for spreads. So as I said, it might flicker to 5, and then like I say, I'd just round it up to the nearest whole number or half, just allowing a bit extra than spreads, like I say. So you could have quite comfortably got a 3 pip stop loss on that. As long as you was happy that there was nothing down here that it came for. Something down below this point here, obviously there's no real major pushes away. Maybe something there, but obviously if it went from there, this push doesn't do anything. So that's why this one here, it's a real sharp push down. It, like I say, it will take liquidity and people's stop losses or break evens or whatever, and then it will directly leads to the 1 minute structure high being taken. So very, very good area to look for your entry. But obviously it could have well come lower. I haven't looked. And then as you can see, it's done. Obviously, it taps it perfectly. Little tiny bit of drawdown. 7 pipettes, so the 4 pipettes spread plus a bit more, you'd have definitely been tagged in. Don't think you'd have been in drawdown for long. Don't want to look at this as a stat mark. Drawdown for what? 15 seconds? 1, 2, 3. 15 seconds of pain. And then from there, it's off to do its thing. It just makes bullish structures from there until market closed on Friday. We'll open soon. So I think that's gone. Just over 21 risk to reward it as a maximum potential so far. Like I said, I do think it'll at least come into that imbalance to the left. Yeah, so that's basically how I see that markup. So, is there any questions on that, guys, before I move on to randomish stuff?
No, thanks, Lee.
All good, all good.
Excuse me.
It's still obviously what I'm going to talk about is still related to this setup. It's just I know I'm fully aware that we all trade slightly different. So what I wanted to do is mainly for Peter really. So I'm hoping to watch it back. Is that I'm going to try and cover a couple of different ways that this trade could have been approached. So, and I'll cover obviously this spread out. I'll cover the spread out wicks first because I said obviously I struggled with finding liquidity because it was.
Yeah, I noticed you ignored the spread hour on that one.
Yeah. So I like when I was talking to Peter about it on Friday, I think it was. So Peter had this marked up. So he's got a trend line here, he's got a sweep, and we've now had a break above there. So
Right, so that's when you were saying he was moved behind.
yes, yeah.
Yeah.
So it's the same as what I've just covered. It's the same setup, trend line sweep. breaker structure, but he's obviously possibly still waiting for mitigation. And it's also more risky because this is the actual move, because obviously this is a low before an actual breaker structure. So his sweep is the mitigation of what I would consider the actual move. So what it does, I mean, if this went and filled that imbalance up higher, comes and fills this up here, it might come back for what he would have to say marked as an entry. I've not looked, so I don't know what's there. But if it comes and fills its targets up here, it then may continue the 15-minute structure down. So this is why I was basically saying like I think is a move behind. I think this is the move, and obviously that's the first point of entry after the break. If it comes back, depending on when it comes back now, like I say, it might have completed its task, and then it might continue this bearish 15-minute structure. So we've got a high, low, lower high, lower low. It might come and put the lower high in before then make a new lower low. So timing will be important with this setup, I guess. I suppose it's important with everything, I guess, but just again. Because it might be important to find if that's liquidity there. Once it takes this, if it doesn't tag him in, it takes that before. Quite. Quite. Don't put the other one. Leave it on for now, just in case. That something else. I will get back to it in a minute. Sorry, guys. Yeah, so it's a bit more risky now anyway because it might have even filled its obligation to continue lower if it's going to. But it also might come back tag something in here or here, and then continue for longs. So yeah, there's a possible setup there, but with this liquidity here, so what I'll do is I'll replay it and another 5 minutes so we can see a little bit. Actually, no, I won't. No, I won't. I'll come on the hour. So I spent ages trying to look for some liquidity to justify this price action that leads to the 1 minute break structure being a sweep. That must have been a good 40 odd minutes and just thinking nothing lines up because of this wick here. And then that wick there is also a spread hour. I realised that was spread hour before I realised this was spread hour here. So nothing lined up because of them two spread hour wicks, and then I clicked on that it was spread hour. So obviously that's half one-ish, that tap there. This middle touch where I've got my structure low now set is pretty much halfway in the morning. This is spread hour, start of spread hour. So from there, that's as far as I'm concerned, pretty much from there doesn't that doesn't happen. Because obviously brokers will all be different. I'm sure on like forex.com this will be very different. It might just be this normal continuation price. So obviously that possibly a low. This 29, 20, 25-ish candle, and then obviously pulls back low, new low, which is not spread hour. And then obviously we've got the first touch, which is miles away. First touch is it. So real clean trend line. But obviously that one there is spread out as well. You see. So that's that trend line. So getting into the different ways that we can approach this setup, like I say, I originally purely looked at it as a structure sort of setup. Like I said, I couldn't find the trend line. So I knew after we took the 15-minute low, which is now there, so there's a black, I'll turn that orange. Once price took, get that off. Yeah, once price took this low, obviously, as soon as we see bullish signals, which would have been this price being taken, this high being taken, and then obviously we just look for an imbalance to be filled entry and pick your TP based on what you think structure might do next. So purely from a structure perspective, you could pick up this trade. You can look at it from the perspective of obviously we've had a build of liquidity, we've had a sweep and a break as well. You could have also got in if you didn't want the 1 minute break. Obviously, if you had that marked up prior to it being swept, you could also add in a confirmation of what it taps into. So, like I said earlier, this order block here is responsible for previous liquidity being taken, so it makes it a very good order block. I'd never actually recommend just getting in off it, filling that imbalance, because obviously price is downtrending to get to it. So there's nothing to stop it from just continuing straight through it, which is why I always wait for the 1 minute break. But like people will wait to it's made liquidity, it's swept it, it's tapped into something that they also like. So people could have easily set a entry on as soon as it tapped into this zone. You wouldn't obviously get a super tight entry because it's a big zone. So that's the second way of possibly looking at it. And obviously the third way is you could have forgotten all that. You could have just had this marked as an order block, and obviously it's tapped it, and then it's shown again sign of bullish intent. And then obviously, but that's assuming you use the 1 minute break as a final signal, and then obviously pretty much all of them entries criterion are based around the 1 minute break, but the important part is that it comes back and mitigates an order block and fills an imbalance that we like the look of. So yeah, we can come away with pretty much a very similar entry but the same move basically based around multiple confirmations. So I very rarely, like I often would drop the liquidity. I'm not overly fussed about if the liquidity is not there, but I never don't want to do that. But I never drop the structure side of it because I'm always looking for that break in the desired direction as a confirmation. It's definitely better with the liquidity, but yeah, like I said, it's I mean I've got no actual data to test it, but I'd be fairly confident in saying that if you was to drop the liquidity trend lines or whatever and manage with structure and a bit of knowledge on the rules that we have for order blocks, then you would be more successful than dropping, say, the structure side of it. But I think you're always going to need imbalances. Obviously, order blocks come with imbalance because they create each other, they justify each other. So without imbalance, there'd be no such thing as an order block, and without an order block, there'd be no imbalance created, sort of thing. I don't know if I've said that right. I'm sure I've said it better before, but without each other, the other one isn't possible. So it's basically, so yeah, I think we're always going to need imbalance. We've got 10 minutes left before it kicks us. It's 9 o'clock now, so
Imbalance is just a clue. of an order block, really, is it? You
Yeah,
can't have, yeah,
yeah,
you can't have one without the other.
no,
It's the shadow of an order block, really.
yeah. So yeah, like it's literally it is just a clue, and it's just a clue of where we believe a lot of money was injected into the market. Whether I think sort of like the idea would be you would say is obviously because it's moving prices moving down here. Obviously, we're on the 5 second chart, so it's not like a great time frame to base price action on unless you're looking for an entry specifically only. But so the idea behind imbalances is that where let me find a better looking one actually. I know that's the one, but here this is a huge like 5 second candle.
Yeah.
All of this sort of stuff is balanced. The actual order could have gone in. I don't know. Let's say Mr. Banker wants to inject. I'll say 500 million because I don't know if that's a lot or not for like HSBC or what. I don't know. I'm assuming they'll be
I don't
billing.
think so. No, I don't think so.
Nah, I think it's probably a small order, but I'll say 500 million because it's a lot to us. So their order could have gone in at any point in this, but this point here is where I would say just draw a line on it. Turn it green for money. Yeah, that point there is the point in where the effectively the sell orders run out, I believe,
Yeah.
or they get far powered over by the buys, and then obviously which is what causes this because there's nothing to stop the, the buy orders moving price up, I guess. So obviously that's what I believe imbalance to be. Whether that's
And
true,
then what happens? The other thing what happens is the buys at a maximum price.
yeah,
Yeah. So they're not willing to buy above what 86173.
yeah,
So then the buys run out
yeah,
and the rest of the order block isn't executed yet,
yeah,
waiting for the price to come back.
yeah,
Because people don't buy at any infinite price. They're only going to buy in a certain price range. Yeah.
yeah, 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 yeah. So yeah, that's obviously imbalance is mega
I was
mega.
going to ask you to go to that on the 1 second to see what it was there. I bet that was there on the 1 second. Never
Two
mind.
seconds.
Sorry.
No, it's fine. I'll go back. It's not an issue.
Go and have a look.
I was going to go look. I just went to go look back and see what that green line happened at that green line. That's all. Um, the one I was looking at, or the actual entry one, mate. Sorry.
The 5 seconds you were looking at a minute ago, I just wanted to see the 1 second of it. Right. Can we see that 1 second? Let's see if that happened in 1 second. There you go.
Yeah,
That gap happened in 1 second. I think you'll find on like 2 or 3 seconds. If
yeah,
you look actually, so that's what 42, 20, 23, 24, 25. There's two dots or two more candles, yeah. 24, 25, and I bet the next one's what's the one to the left there, Lee? There, 30. What was it? 29,
25, 20,
25. So it was 4 seconds. No, it was 4 seconds.
yeah,
You got to be careful because seconds where nothing happens on the chart.
yeah,
So it looks like things happen contiguously, but sometimes they don't. Sometimes there's a second where nothing happens, or several seconds where nothing
yeah,
happens. But you don't see that on the chart. It's fascinating.
yeah. It's like we've cracked
Oh
the
no, I
code,
love it.
isn't it?
Yeah, I wish they would put the blank columns on the chart.
Yeah, yeah,
Yeah, because you see sometimes you think something happens in 10 seconds,
yeah,
but
yeah,
actually it happens in 2 seconds, but you don't notice it because there's stuff either side of it. What there
yeah,
should be either side of it is blank
yeah,
space. It doesn't matter anything about over a couple of seconds, it's irrelevant. But when you get down here, it
yeah,
can make a difference.
yeah. Didn't want to move that.
There's something, there's stuff going on. They parcel up orders. They might do 500 million, but they do it in they do a 17 and a 47 and an 82 and like that's how they do
Yeah,
it. They don't do it in one big block, but there still leaves stuff like this behind.
yeah, yeah. Well, it's a huge signal, so
Yeah,
which is why obviously I mean, I've pretty much said from day dot about obviously imbalances being filled is I mean, I decided very early on in my journey that because I was at work and listening to lives, and I was always thinking about trading. I guess obviously obsessively, and I decided early on that imbalances being filled is a better option for me anyway, because half filled imbalance left the option that obviously price hadn't come for its target. It's pretty much like a line in the sand sort of thing. Do you know, like imbalance is being filled, like you know it's done with at that point. You was either right
Yeah.
or wrong. Whereas half filled, is it done? Isn't it done? Like it just adds another dimension of uncertainty.
Nowhere now. Yeah.
Yeah, so not that that's not to say that sometimes they do get half filled and fuck off, and that was probably the right move. But for my trading and peace of mind, like I say, imbalance filled is always going to be the better option. I think I'd be open to someone to like debate me. Well, not debate me, but try and make a case against it. I guess, but yeah, I don't think anyone will actually be able to because I know when something's filled or not. So yeah, so imbalance fills decide if that's better for everybody. Obviously, everyone that watches is back. I think that's about it, guys. So if there's any questions, I can cover them quick, but I've only got like two, maybe 3 minutes, 3 minutes left. I don't want to start anything major now.
No, I'm good. Thanks, Lee. I'll watch over tomorrow.
Sweet. Um, on Malcolm.
I'm all good. That's good. Thank you.
Yeah, no worries, guys. I'll call it there then, and I'll get this uploaded in the next 20 odd minutes.
Thanks, Lee. Have a good week, mate.
Cheers, guys. Speak to you in the week.
Cheers. Cheers.